Hi everybody, my name's Emily. I'm a campaign manager with Birchal and I'm very excited to be running the webinar for Dcypher today. Thank you all so much for coming. Just before we get into the formal proceedings, I'd like to begin with an acknowledgement of country. So I'd like to begin by acknowledging the traditional owners of the land on which we're meeting today. I pay my respects to their elders, past and present, and the Aboriginal elders of other communities who may be here today. Welcome everybody. I'm so excited to introduce Jake and Dave from Dcypher. I've heard so much about your company and I think everybody has here today. And we'd love to hear from your perspective a little bit more about the company, why you're looking to raise and what you're looking to achieve.
Thanks, Emily. Hi, everyone. Welcome. I'm Dave and Jake's on the call as well. Jake's the founder of Dcypher. I am co-founder, and we'd love just to use your time wisely today. So what I want to do is share with you why we're doing what we're doing, where the company's up to, and where we see it going in the very, very near future, which we hope will be exciting for you. So let's jump in. What we'll do is we'll run through an overview of where the company is at, and we'll talk a little bit about who Jake and I are, but then we're going to, at the end, dig into a lot of questions that I'm hoping everyone's prepared or thinking about. So without further ado, let's start the conversation. When Jake and I got into Dcypher, what we had was a vision of how do we help the average person become a competent trader. So we saw a world where it's sustainable, it's empowering, and it's a very inclusive environment. So that led us to think about how do we go about this? And look, as far as backgrounds go, I came from AWS. I led a financial services team, worked on a lot of projects where we built digital banks. We worked with institutional trading platforms. We did all sorts of things. Jake's had the privilege of working within the banking world for a lot of years. And interestingly enough, he became one of my customers on the journey through. So we ended up putting our heads together, and Jake was already running down this cool technical idea around how do we help everyone become better traders. And that was really where the vision was born and where we started off. So we also have on our team, we're only a small group. I won't make any bones about that. We would love to run a lot faster, but we're very, very lean, and we've got a small development team all offshore besides Jake himself. And that's just helped us to really reduce cost and overhead. But on top of that, we've been working with growth people. We've also got a certified financial advisor that we work very closely with to help us just make sure that everything we're doing is very, very well aligned to what the financial market analysts are looking for. I don't know if anyone saw, so I've got to blow my trumpet here a little bit, but we managed to get featured in the AFR last week. Hope everyone saw it. But what we were really thrilled about was the AFR saw what we were doing and the vision, and they realized that, sure, there's a lot of platforms popping up all over the place. We won't make any bones about that. But the difference is, if you have to think about Australia, it's very busy with financial services and financial capabilities, but it's heavily polarized towards managed funds. And if any of you have used them, yeah, returns can be good, returns may not be good, but also you pay a price for it. So what we wanted to do is really look at how do we reduce the overhead on the average person using a combination of algorithms, but also help with education and support so that you can all start to build your own strategies and feel quite competent in what you're doing. So when we look at the average retail investor, and look, I'm an average retail investor myself, but we really do think that it's very, very hard, and I talk from experience, it's very hard to get your hands on good expert advice. Anybody who's tinkered with algorithms know that it's not a small learning curve, but also the time commitment to manage them, to manage positions, to focus on the market, and not miss anything is also very time consuming. If you look at a brokerage, professional brokerage house, the cheapest I've been able to find is like $1 million that they want to manage for you to take you on board. So there's a definite gap between what the average person has available that they want to spend and invest versus where the institutional investment community works. So our whole idea is to provide everybody with an app that sits on their phone, and it's easy to use, it's highly automated. There's strategies that you can use which suit your risk appetite, your profile. It could be a particular stock, it could be a particular cryptocurrency, but something that matches where you think you want to go with your financial journey. There's a lot of automation because, let's face it, when markets move, they move really fast. And quite often, I know I've been asleep a number of times when Bitcoin hits the wall or something goes wrong somewhere in the world, possibly a war breaks out, but markets, when they move, do with great vigor and very quick. So that volatility is where we find a lot of users start to come unstuck, especially if you're doing traditional buy and hold, or if you're also trying to enter and exit the market. We find that there's a lot of FOMO out there. There's people who see headlines in your favorite media outlet, and then it's quick, I need to buy, but it might be too late. Or quick, I need to sell. Again, it could be too late. So what we'd like to do is, through the empowerment, we want to provide you with a digital advisor. Now, what that means is we've got a number of algorithms built in with trading strategies as well. Now, the idea is we don't believe that anybody trades off a single algorithm. Sure, people have got their preferences, but there's a lot of different market dynamics that come into play, a lot of different metrics, a lot of different variables, and it's never one size fits all. So what we see is a world where we offer people common and institutional algorithms. Some you might know, some you might really like, but also we then couple that with a lot of our proprietary, more recent machine learning type algorithms. So when we talk about different styles of market approaches, I talk about this a fair bit, but very few people I see in the world work with social sentiment. And we think about what happened last year. There was huge events with the Reddit army where they made markets, and there was a lot of money moving back and forth. And certainly the hedge funds who shorted a number of these stocks weren't very happy at the time. But the idea is we've got a number of categories that we focus on with the machine learning. One is price predictions. We need to try and work out where the price is going to go. Capital allocation, and then the last one is risk. The whole combination is really where we focus our time and effort, because we believe that's going to give overall the best return for each user. So let's talk about where we're at. We're a global company, and I'll talk a little bit more about that soon. But we've got an entity in Australia. We've also got an entity in the US. We've got a holding entity which is in Australia, hence why we're looking to raise capital here. But last year we went out and we ran a beta test for about 6 months. Crypto was largely unregulated everywhere last year, so it allowed us a lot of freedom to work with a number of different countries and just see what everyone's appetite, demand is, but also what they really wanted to see from a retail space. We do crypto trading. You probably heard me talk about that a lot, but also we have now contractual agreements so that we can offer US stocks. We've got a licensee in the US that we work under, and that just allows us a much quicker time to market. As far as working in the Australian market, I've had a number of questions about this. Yes, we want to do it, but it's not a cheap process. It's not straightforward. We do need to get an Australian financial services license, and that's going to take some time. We envisage, and we've been quoted, it's about a 9-month journey. And as I mentioned, it's expensive. So hence the capital raise is to help us achieve that. Now, we've got a number of trading strategies. Now, to help everyone understand the difference between an algorithm and a strategy, very, very simplistic terms, an algorithm is a single method to determine a market condition or conditions. Now, when we talk about a trading strategy, that's where we take a combination of algorithms and we use them together to work out where the buy and sell signals are. So when we look at the backtesting strategies, I should say, algorithms are normally backtested for 10 or so years, but the trading signals or the strategies that generate them, we've backtested those over a number of years, but these are the signals that tell or give the notification to each user when to buy and also when to sell. Now, obviously, we want to extend that. 3 years is not enough. We want to grow that at least to 10 years as well, but there's a little bit of cost involved there. So hence the capital raise. But also, we're looking at where are those big tail conditions as we start to really ramp up on new algorithms that we can start to capture new conditions in the market. So let's have a look at some of the results. I get asked this a lot. Now, when you're talking about providing some sort of automated trading, I've seen a lot of managed funds out there. They have been using algorithms for a long time. You've got people that also work and manage algorithms, but when you look at a fund or an ETF, it's often compared to an index. Now, given we work with individual assets, be it either cryptocurrency or be it an individual company on the US stock markets, the idea is we look at, well, how do we provide a fair comparison? So what we look at is if you were to buy and hold, and the condition being you buy at one point, you hold it for be it 12 months, be it 3 years, whatever it is, how does that then compare to if you were to auto trade through us? Now, when we tested a single trading strategy, as I mentioned, there are a multiplication of volume, momentum, and direction. They're the bare ingredients that we put in there, plus social sentiment, and there's other indicators that we leverage. But the idea is these strategies are what ultimately provide the signals that can automatically enter and exit. So we looked at a couple of options. One was, let's take 3 years on crypto. And we also looked at what does 12 months look like with stocks, just to give everyone a bit of comparison, different timeframes. So the starting capital was $1,000. And what we found was, I mean, look, let's face it, cryptocurrency, there's some huge growth. But the blue chart was the buy and hold if you just bought at one point and held onto it. And then the red is if we were then managing that money and entering and exiting orders. Now, anybody who thinks, yeah, look, crypto, it's been on a great run. Well, let's not forget there's been a lot of bear markets that have come up in the last couple of years. In fact, it's almost cyclical each year. So whilst the gains are pretty amazing, it also does take into consideration a lot of dips that happened along the way. Now, when we balance that out against stocks themselves typically less volatile. There's a lot more to a stock. There's an asset, there's fundamentals in play. And what we wanted to do was just give you a bit of a comparison that whilst none of our trades, automated trades, lost money, in fact, most of them came out quite well. We did have a couple which didn't fare as well as just a buy and hold strategy, namely Tesla and also Microsoft. But other than that, you can see a couple of stocks there that actually went negative over the year. So if you were to buy and hold, you would have lost money. So it's Facebook, you would have been down 22%. NVIDIA, great company, you would have been down 59%. But we still managed to find gains through that volatility. And that's really, I guess, what I wanted to talk about is a key thing for us is, and where we really accelerate at this point is when we see the markets with a bit of volatility. And the difference being an average user barely has the time to manage the volatility or know how to manage the volatility. And everybody gains in a rising tide. I mean, let's face it, but very few people know how to manage volatility and do it effectively. So that's really been our core focus. So what do we see the opportunity? It's big. I've had a lot of questions from institutional investors, and it's normally, well, why don't you just do institutional investors? It's like, well, yeah, there's a lot of people in that space for a start. But I don't think anyone's really, truly taken a good look at where the retail trading growth has come from. Because it's only been the last couple of years, it's really accelerated. Made a lot of headlines last year. But if you look at the US, again, that's where we've also got an entity, 142 adults are retail investors. That is, they've got individual stocks. It's a smaller percentage with crypto, but the Australian market also has 6.6 people that have individual investments. As I mentioned, the managed fund world, it's huge. It's 2.5 trillion. But the downside is it's only got a 5% retail participation. That came out of Deloitte article just end of last week for, I think it was ASIC or the ASX. But yeah, you've got this country, we've got 36% of us own crypto. I certainly do. I'm sure there's a lot of people in this call that do. And I think most of us probably have shares in some market as well. So if you look at the graph, you can see the last 2 years, it's been a hockey stick. And there's been times when the retail traders, the volumes have just been so big that it's starting to fundamentally change the market performance. And when I talk about the market performance, a lot of trading has traditionally happened with fundamentals. You look at an earnings call, you look at some key announcement, and typically or traditionally, share price moved in relation to that. But now we're seeing the sheer volume and interest just out of be whatever it is. Could be emotion, it could be just a love of a certain brand. That's moving markets on its own. And it's starting to really change the dynamics and how people need to work with their investment strategies. Competition. It's a busy place. I will not kid anyone here. There's a lot of trading platforms popping up. In fact, the first question the AFR asked me in the interview, there's a lot. Who cares? Like, why you? There's one popping up every other week. And I said, there are, but everybody's very similar in my humble opinion. I see a lot of platforms which, and by the way, algorithmic trading is not new. It's been going on since the 70s. And it's just starting to become a lot more prevalent for, I think, retailers. But if we look at hedge funds, they've been using it for a long time, but they're often restricted with their own funds. And I've had personally a number of occasions where I've wanted to invest in certain equities. They're outside the fund and it just leaves you, well, can't touch that. So I'll just keep working within the fund. So it works for some people, but anybody who's looking to do a little bit more as far as where the world is going, it could be restrictive. Then we also look at a lot of platforms. There's a lot of just transactional, what I call transactional buy and sell trading platforms. They're popping up everywhere. God bless Robinhood and what they did for the world. They really did blaze a trail in giving mass people access to the markets. But that's also, in my opinion, created a heightened risk, because when you've got a lot of individuals without the necessary education or knowledge on what to buy and sell, you can end up with a potential leaning towards gambling behavior, which there's been different states in the US that have called out this types of behavior to date. And then the other thing is you've got a lot of really good platforms out there. I will not underestimate that. There's some amazing work that's been done by some really clever people, but I've had a number of questions through this EOI process about a few different types of platforms. And one, maybe I know about them, maybe I don't, but ultimately they're incredibly complex and costly. And that seems to be the overall theme that comes back. And so what we want to do is make this really simple and a lot cheaper than what everybody's seeing on the street. I think the last comment we had from a potential investor was, it's too cheap. You've got to raise the price. Like, well, yeah, maybe we'll talk about that. But look, ultimately, we see what we're doing, the way we're going about approaching solving this problem as being pretty unique. It's not going to be unique forever. There's a lot of people that have come out with different algorithms, different capabilities, but we think being able to automate and really empower the average person is going to be a bit of a first. So if we have a bit of a deeper look at competitors, as I mentioned, it's a busy market. We haven't got everybody, but you've got some incredibly intelligent options out there, and you've got some far more simplistic. And it really comes down to what's that balance between intelligence versus barrier to entry. And we were focused on trying to find that sweet spot so that easy to use, I mentioned, but also gives you enough intelligence so that you felt really confident that you could make a mark for yourself. So our go-to-market strategy. If anyone's heard me, if you picked up on, I have mentioned the US a fair bit. It's a huge market. It is the largest, or one of the largest retail trading environments that I've seen, that we can get really good access to. It's got the largest stock market, and there's a lot of really great companies and interest in working there. So the first thing we did was to make sure we found a licensee in the US so that we could get a really quick growth and quick time to market. Because we see that as not only our biggest opportunity, but it also gives us the ability to great feedback, start working with some amazing companies over there. And also we think just the user opportunity itself in what you can invest in will be beneficial. Now, with regards to Australia, we've got a seed with a freemium version that we're going to use. So I was hoping to do crypto this year, but the federal government came along and regulated crypto. So unfortunately, that's gone back a little bit. But the idea is, what we want to do is not work under a licensee. That's our preference, simply because anybody we've spoken to has been interested in us adjusting our business model. Not saying it's off the table, but we see that to work in Australia, the independence is what we'd really like to have, and therefore get full AFSL. And what that means is we'd be looking to launch as a license capability for the Australian market in 2023. So how do we get going? We have got referral programs. We've got a big social marketing plan. We've got a lot of SEO focus, PR. We've already just started on that aspect. Affiliate marketing. There's a lot that we're going to do to really help key influencers start to adopt us and work with us. Anybody who's a heavy social media user will probably already be part of one or more different influencer groups. I know loads of people that just wait for some kind of unofficial recommendation to come from one of these influencers, but they also are very transparent in the tools they use. So we see that as a key strategy, where you've got an influencer who might have 20, 30,000 people. We know that simply by arming them and rewarding them for it, that they can have a multiplication flow-on effect to the people that are following them. So we see that as really what's going to give us different hockey stick levels of growth. Revenue model. We are a commission-free platform. We want people the freedom to trade high frequency or low frequency without having to pay for it. And we also see that's just the overall trend of the world. US has been pioneering that. This country is slowly going that way, but we see that as really the way forward. Now, how we plan to make our money, we are pre-revenue. The idea is we've got two methods. One is subscription. So very, very low cost, $9.90 a month if you sign up for a year, or If you just want the option of trialing it for a month, maybe you get out, maybe you get back in, whatever, it's going to be closer to $20 a year. And then there's a second part to that, which is the order flow. So at the moment, we've got crypto spread, where we are able to make money off the difference between wholesale value and the market value. It's a classic move that Robinhood's been doing, and pretty much every institutional investment firm has been doing for a long time. So they're the main two things. Whilst we don't have order flow spread on stocks at the moment, what we really would like to do is, once we get licensed in the US particularly, we would like to start building out more capabilities so that we can grow that back-end revenue model, which is going to directly impact or benefit the bottom line. Just to make sure everyone's not confused, subscription is the only cost a user sees. The order flow spread is completely invisible. It's purely back-end, and it's just between us and third parties. So what we're doing at the moment, we're working with Birchal, amazing company. We do need a little bit of capital to get up and running. We don't want to saturate ourselves with too much capital, but as far as getting up and running, we do have costs, and also to maintain momentum and grow at the rate that we would like to, we need a little bit of extra assistance. So the one-off cost that we need to put aside and keep is a clearing deposit, and that then allows us to trade orders on the US stock markets. But then there's also some other costs that come into it, sales and marketing, and other bits and bobs. Product development, we've got a huge plan. So we see those in the table there as the key areas. And at the end of the day, the speed and pace at which we grow is really going to come down to how much we can afford. Marketing costs money, but also acquiring customers costs money. So if the more we can afford to spend on product, I should say on sales and marketing, then that's the faster we can grow and acquire customers. So we're very much volume based. Timeline, let's have a look at that. So at the moment we're trying to do a fundraise. It's our seed raise. We would like to launch in the US next quarter. That's our goal, that's our preference. And then we also would like to, depending on what kind of funding we're looking at, we would love the opportunity to start talking in serious conversations with the Australian regulator. We've already started preliminary, so we've got a good idea. We've got a financial services lawyer. It's just now a matter of getting the capital to move forward with that. And then ideally in 2023, we'd love to be able to offer our full-blown application to the Australian market, but also we'd love to offer it with the ASX, which comes up on questions on a regular basis. So that's a very, very brief overview. And I'm hoping that's given everyone a bit of an idea of where we're at, where we're going. And at this point, I think it's time to pause for questions and have a bit more of a dialogue.
Thank you, Dave. That was so informative. If anybody has any questions, please feel free to pop them in the Q&A box. I'll just ask a few questions that we've got here as well. So I know that you're already in the US market and looking to expand into the Australian market. Are there any other markets that you're looking at targeting in the future?
Great question. Love that. Yeah, and you'll see that in our offer document when it comes out hopefully next week, if I can get it all signed off. What we had the pleasure of being able to do is get feedback with our crypto service in the beta last year. India itself has proven to be one hell of a huge potential market that we'd love to focus on a little bit more. Also Southeast Asia. But we've got high designs on becoming regulated in the European markets, although I don't want to get in front of myself because we're talking about a lot of markets, a lot of complexity and a lot of growth to get there. But we see a massive amount of potential outside of these two regions, yes.
Fantastic. And do you expect to have any issues surrounding IP or defensibility of your product and your algorithms?
Yeah, IP is interesting. It's never a cheap conversation. So we look, for anyone to get any sort of patent or intellectual property rights, it's an expensive legal cost, one which we don't have at the moment. So when we do have a bit more capital, the idea is we will and absolutely do plan on working with a patent lawyer and also an IP lawyer to see if we can start to protect some of the intellectual property that we've come up with. But it's just one of these things. It's costly to do.
Sure. In terms of advancing your product and service, where do you take inspiration from? Is it from your users or will it be also from your investors?
Both. Our users are without a doubt our biggest inspiration and driver for what decisions we make. We see investors as customers as well, so equally. Now, depending on the investor type, everyone might have a slightly different view on where we should go, what we should focus on. But ultimately, we want to keep our retail customers and user base at the core of what we're doing. And it's not to say that we won't offer a service for institutional companies as down the track. We certainly talked about that. The idea is we want to make sure the business stays flexible and relevant to the right people, the right crowd, the right market, and also the shareholders.
Sure, absolutely. We've got a question from Ken. I think I can shed a little bit of light on this question as well. He's asked about how, as an investor, will you make money down the track and what are the revenue projections and exit strategy? So something can, when you're looking at a CSF raise, you can't necessarily talk about projections as we don't have any revenue at the moment. So something that we can look at though is business strategy. So next week, when the offer document is presented to investors, I definitely recommend you have a look through, have a look at the business strategy and where they would like to aim the funds and where it will be going. So a little bit of that was mentioned when Dave did the presentation just now. And in terms of exit strategy, that's also something that unfortunately can't be promised or guaranteed, but that's definitely something you can hear a little bit more about when you read the offer document. So a way that you can make your money back from a CSF investment is potentially an exit, a share buyback, or if the company does go public. So that definitely does happen. So if you guys wanted to talk about how your business strategy will be presented in the offer document, feel free.
Yeah, great question. Look, as far as the business strategy goes, we're very keen to really get on some strong growth in a number of markets around the world. We don't want to grow slowly. We want to grow as fast as possible. Now, to do that, it means that we will have the opportunity to measure and understand when's the best time to expand in different regions. Because we're not looking at this as just an Australian only, we're looking at this as what markets make the best sense at the right time. So as I've mentioned, the US first, Australia ideally second, but we've got high designs to go beyond that. And as we do, there's going to be different step changes in what the company structure looks like and what overheads we need to wear in order to make those step changes. And with that comes cost. So that cost inflection point is going to be times when we're going to need to either look at the market for capital or it's going to be fueled off internal growth. So it's hard to state exactly what it looks like because I do have some projections, although can't really go into that right now. But where we see this going is we'd love to, Jake and I'd love to have the pleasure of running the business for at least 5 years to achieve a lot of our strategic goals that we have in different markets. That will then create us as a well understood brand in a lot of markets with a lot of different options, but also allow us to evolve the technology to be incredibly usable and ideally successful. So we see there's going to be a number of points when an investor has the option to grow with us or will have the option to exit as well. And it's just a matter of what do those timelines look like? Well, it's hard for me to say specifically, but I'm looking at increments of 2, 3, 5-year type journey where we see core inflection points.
Great.
I'd
And
love to be more specific, but I don't want to breach any thing here.
you're right, Jay, that's fine. Are you intending to expand your offers and features on the app?
Yes, yes. The app itself is not just an algorithmic thing that just does stuff. We're really keen to provide a bit of an ecosystem for everybody. So within that, we've got chat, we've got news. We really want to have an interactive environment where people can go and feel that you've got peers to work with, learn from. You can run trading communities. You've got a full virtual or paper trading option there that we'd love to run some competitions around, make it a bit more fun, put some prizes out there. Really gives people a lot of features that they're going to enjoy to use and want to stay with, and hopefully make this quite sticky. So the trading itself, we've got a lot of capabilities that we're starting with, but there's also a ton more that we need to introduce. We're not starting off with a really complex trading set of options. We're starting off a bit more simple to try and minimize the risk and make sure that we don't get ahead of ourselves. So for us, I get a question that pops up time and time again, which is, do you support short selling? Well, not yet, but we're going to. Will you support trading of options? Potentially. So there's a lot of things that we want to do that will then broaden what we're doing, and I guess the market reach from not just your traditional retail investor, but also really start to pop up and nudge elbows with some of the expert traders out there as well. And I know Jake loves to say it, but if anyone's ever truly been amongst the institutional trading platforms, I think everyone's quite knowledgeable about Bloomberg. I'm not talking about Bloomberg News, but Bloomberg Terminal. It's probably one of the mainstream institutional trading platforms, and I should say ecosystem, that's come out. And we see a vision where we create a very similar ecosystem. Obviously not the same, but something that's far more usable for your average person.
So would you say that's one of your strengths as a platform, the, I guess, user ease? What kind of benefits do you have above other platforms that might be similar?
Yeah, what we see is there's a lot of easy to use platforms out there, but it really comes down to, well, what are the options that they're letting you work with? Where we see the real value is not just the automation, but the transparency of what we're automating. So that transparency then comes with a lot of explainers and notes and blogs which we're writing that help the average person go, well, look, I just don't get that strategy. I don't get that algorithm. And we don't expect people, but you've got the chance to look at it and go, oh, I now understand why you've given me that recommendation for a buy or a sell. Start off with the explainer. You can start to get yourself familiar with the different algorithms. But then if you really want to go deep, you can take that journey. And we see the individual going from being potentially quite unknowledgeable in the algorithmic space. And over time, and it's up to the individual user, being able to evolve and learn as much as you like, but do that without having a high risk approach. So for us, there's not just that, but we've got some really cool intellectual property and new algorithms that we know we don't see much of it, if any, in the market. So there's a lot of differentiators that we're going to have in that space. But as I mentioned, where we see the core difference against other things that are easy to use, it's just going to come down to how we help educate and also empower people.
Yeah, great. And post-raise, how often do you intend on communicating with investors on updates about the company?
Great question. In the offer document, we've outlined it's going to be at a minimum an annual process. But if we've got great news to share outside of the annual cycle, then we will certainly be communicating. So for me, what I look at is communication outside of that cycle being key announcements around us achieving certain regulatory status, milestones, which could be user or customer based, it could be revenue based, but we certainly want to maintain some sort of dialogue, but not for the sake of dialogue, if that makes sense.
Yeah, absolutely. Just let everybody know what they need to know.
That's right. Yeah. Key updates for me, I love to shout them from the rooftop.
And what's your main objective post-raise? What does the next 12 months look like for you guys?
Yeah, the main objective for us is get into the market and start growing, build a customer base. We'd love to get to a point where we're no longer cash flow negative as soon as possible. And the quicker we can do that, then the quicker we can start looking at broadening our user base and regions, aka Australia, for example.
Sure. So Ken has asked, is the app a fully automated trading or semi-automated where the user still has to confirm the trades?
Great question. At this point, it's semi-automated. Now, the option being we still have a bit of a journey with the regulators. So technically we can make it fully automated, but we do have, and we have given users the option to specify when that trade becomes automated. But once it does, then we take it on the journey, or I should say the life cycle, for as long as what makes sense for the user. So we've always provided the option for user to jump in there and manually dictate where it goes and what it does. That will never change. But the more people get comfortable with the way it works, the algorithms, the strategies, there's going to be a tendency for people to go, you know what, I'm just going to let it do its thing. And then that will evolve into a greater level of automation by choice.
Sure. And a lot of users, such as myself, don't know so much about, say, crypto trading, things like that. Will you be providing any education that users can use and investors as well, just outside of the app, or is it all internal?
We've got a series of educational capabilities that we want to provide. Again, comes down to getting a little bit of money, but we've got a YouTube series we want to run so that people can go on there, understand the basics, and we're not going to be a full educational course-driven approach, but we want to provide enough I guess, key knowledge elements so that people can go on a bit of a journey and start off with what's crypto 101. Well, okay, I understand crypto. Now, how do I know what a certain crypto is going to be doing and why would I be interested? And start to help build people's knowledge and comfort, because one of the big shortfalls I see is whilst there's some great options out there, very few of them enable the user to learn and adopt. So then you've got the other end of the market, which is purely educational. And we really want to bridge that gap so that we can take early young users on hopefully a really compelling journey.
Yeah, amazing. Is there any more questions? I think we might be able to wind up a little bit early, which is fantastic. But thank you guys for so much information. It was fantastic for investors to be able to hear all about the company, and we're very, very excited for the launch of your offer campaign. And if anybody has any questions afterwards, feel free to reach out to Dave or Jake. You can reach out to them via their Birchal profile. They'll be on hand at any time when you need.
Absolutely. I just want to say, everyone, thank you so much for giving us some time. We know that everyone's incredibly busy. And we're here for you. So if you've got any questions, please don't hesitate to ask. I got all the time in the world for anybody who wants to work with us. Love to hear from you.
Thanks so much, guys. Have a great day.
Thank you all.
Take care.
Cheers. Bye.
Bye.